Good afternoon. This is Chris Brecher with the Simpler Stocks free video for April 5th, 2016. As you see, it's about 29 minutes before the bell. Wanted to get this out early. Basically, what we're seeing in here is sort of a continuation of what I saw on Friday. I know the video went out late, so I apologize for that. But basically, we're seeing this, that you have the ESs, and like we said, still in an uptrend, so stubbornly above every moving average. But what you're getting is certain cracks within it. And what we're talking about in here is the Nikkei number one. And I know I talked about this on the last video, but this is what we're seeing. When you get the Nikkei and you see this having another leg lower, not higher, and we get this squeeze down here and it's about to squeeze to the downside, trying to get down here. And if you look at it in relation to the ES, look right here. The ESs are not even close to this area right here. On the other hand, you have the Nikkei close to it. And if you actually zoom out and put this on a weekly, you have the Nikkei near an October 2014 low, right in this area, where what do you have with the ESs? You have it near almost closer to an all-time high than a low. Now, what are the danger signs in here for the overall market other than that? Number one, you have an overbought condition. Number one. Number two, you have this difference in the Nikkei. The other, and this is something that we talked about on the Simpler Stocks chat before the opening, was the high yield bonds. And I showed this and I showed it on the video, but we were talking about that if you had the high yield bonds, I'm going to put that on the left over here. And what you got is that you had the ESs on the right go to a new high. And as you see, they sort of work together, where ESs went to a new high, and you had the HYG, which is the high yield bonds, and a lot of banks own these bonds, and all of a sudden last week it started to diverge and get weaker while the overall market went up. Now, what we were talking about on the premium chat before the opening, and you could have made some good money on this today, was how similar Citigroup looked and Goldman Sachs to the high yield bonds. To give you an idea, and this is because a lot of the bank stocks own a lot of these bonds. And these are, a lot of them are in the oil patch. And if they act weak, that shows a little bit of underlying weakness in our economy. Look at this little head and shoulders here. And look at this little head and shoulders in Citigroup. This is why I said you had a rally in Goldman Sachs, but this HYG could put a kibosh on that. And sure enough, Goldman Sachs today is about to have a bearish engulfing flag, as you can see in there. Now, another thing I want to talk about in here, one of the biggest things when I was trading for a New York brokerage firm, I was in the top 5 out of 800 for all 9 years I was there. I was known as being one of the most creative traders. And that's something I try to bring to the premium side. And what I mean by that is this. Look at Under Armour on the left. Now, forget about today. But this is, let me just show you. You move it over. See this? This looks like a beautiful bull flag in here. Why am I mentioning that as creative? Because I was showing everybody on Simpler Stocks that I look at things like StockTwits. StockTwits has a thing called the sentiment indicator, where you can put in a stock and it will analyze the streams of that stock. And if it's an extreme one way or the other, it could mean that the stock's going to do the opposite. Why am I mentioning this? On Simpler Stocks, we have this. I show all the time longer-term stock ideas every night, shorter-term stock ideas, long-term index and futures, short-term index and futures. Sometimes the hot sectors of the day if something's really crazy, like the drug stocks last month, and sometimes the unusual option activity. The reason I'm showing this is when you go to longer-term stock ideas, yesterday I put this up, the StockTwits sentiment table. What this is a reverse indicator. So when you saw the SPX last week have 68% bearish, the week performance up 1.87. Notice something in here with Under Armour last week. 95% bullish and 89% now. That's why I got nervous about even thinking of buying Under Armour. And what happened? Today it's down 2 points. The whole idea is that's creative. I'm the first one that came up with that sentiment table. It's something that takes a lot of hours to just compile. There's no one source for it. And the whole idea is interpreting it as an inverse indicator. when is an extreme? And, when is it not an extreme and it's normal? And I try to go over that in Simpler Stocks all the time, and I've really taught people how to do that. Here's another one in here, Nike. And just for laughs, just to let you know what I did in there, is yesterday on Friday, Nike was right here on Friday, 62. It's now 59.87. It sold off 2.5 points. But there was 95% bullish on there. That was so bullish, and there were a lot of people saying, what are you talking about it being bearish? I actually posted on StockTwits, and I posted that with this many bulls out there, you want to short the crap out of it. You don't realize within an hour how much hate email I got of everybody saying I was crazy. The more hate email I get, the more I know I'm going to be dead right. Now, it also helps that you could combine it with a chart. Like I always say on these, it's one tool in the arsenal. But number one, you had extreme bullishness. That's number one. Number two, check this out on a 15-minute, and you had a bear flag. It's a great way to combine more than one reason. So everybody always asks me, what are your 3 reasons? And I say that sometimes they get pretty darn creative. Well, here's one of them. 95% positive on StockTwits, and then we were alerted to short the stock above 61.5, and it worked. I mean, obviously you would have made 1.5 very easily. It went straight down today. So those are the type of things that we show on the premium side. I'd love if you joined us over there. We have it $7 for 30 days. We go over all these. We have a lot of fun going through the chat. There are 3 things: entertainment and fun, learning, and making money. And if you find creative ways to make money that you'd never thought of before, it makes the site very much worth it. So I hope everybody enjoys this. I look forward to talking to you tomorrow. Take care.